Good morning, traders. It's 8:02 a.m. Chicago time, 9:02 Eastern in Eastern U.S. time. Thanks for joining me for another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market sentiment, money is moving into the um, U.S. equities. Interesting enough, the Euro stocks 50, which is basically the S&P 500 for Europe, except it's 50 stocks and it's Europe, so I guess maybe it's not the same thing. But the Euro stocks 50 are trading down 0.53% or 19 points. Gold is also lagging behind. Crude is trading at 45.94, down 14 cents. And the DAX is also down, but the U.S. indices, the Russell, the Dow, the S&P, and the Nasdaq are all up, with the Nasdaq leading at 22 points. So that's where we stand. As far as news flow overnight, one of the things we should definitely make note of is the volatility on the Nasdaq 100 reached a 14-year high, showing that there is some instability and fear in that index. The tech sell-off was about 3% over the last couple of days, and there was a small recovery this morning as we head higher. The Nasdaq finished strong yesterday relative to where we were. Don't forget that the two-day Fed meeting starts today, and we still have a 97.8% probability priced into the Fed fund futures that there would be an interest rate increase tomorrow. Okay, and then this morning, UK inflation came in higher, 2.9% year over year in May, versus 2.7, I believe, is what was expected. Let me look at that. Yeah, 2.7 expected. CPI core 2.6 came in versus 2.3 expected, so pretty strong there. PPI came in worse at negative 1.3% versus negative 0.5. And we also at 4 a.m. Central, 5 a.m. Eastern, we got the German Zoo current situation survey. Also came in strong, 88 versus 85. The expectation survey weaker at 18.6 versus 21.7. This morning at 8:30 Eastern, we got a U.S. May PPI final demand came in at zero, in line year on year, 2.4 versus 2.3%. Okay. As far as what we're expecting going forward, I don't see anything on the calendar. Um, just the board meeting starting today at the FOMC. I don't see anything special here today. It's fairly quiet. Most of the figures were overnight, my time, and the PPI, which we already got. There's a 4-week bill auction at 11:30, and then there's a 30-year bond auction at 1 Eastern. Let's switch gears and have a look at what we expected yesterday. Here we go. So the primary expectation yesterday was for the market to open um, inside of Friday's range, and the expected pattern is for it to drift downwards before we get an impulse up. And I expected it to push to the low volume node at 24.3150 or so, before it starts to lose steam and then finish in that area, in the 24.30 area. That's what I was looking for yesterday. I looked for it to take out the prior day's point of control, and ultimately finish in that area. Hypo 2, an immediate push higher that gets into the low volume node at about 31. And then I was looking for an impulse down to see if we can attempt to continue this move down. So I expect a little consolidation before it continues down, higher low, and then it goes for the high long term. That's what I was looking for. on this secondary hypothesis. This is what actually happened. Not much of anything. It looked like Hypo 2 was in control here. We did push up to the point of control, didn't quite get to the low volume node up here. Pushed up to the point of control, almost pushed it by a tick. And then we got the larger rotations were down. We got a nice couple of large rotations, a continuation here, and then we just drifted up. Tough trade right in here. Market just drifted up back to the OS high and then drifted down and then back up again. So it was not very directional. The thing to note about yesterday is it's fairly Gaussian, fairly balanced. The market is finding consensus at these prices around the 24, 22 area. And then it finished with a weak high. Look at this high right here. This is a typical weak high. The expectation overnight is a continued drift higher, which we got. We drifted up to 24.3350, and we're currently trading 24.32. So we got the continuation overnight as expected. But what we've put in here is a higher low, and the market's just not able to find sellers to continue the trade down. It found buyers instead yesterday. There's not an impressive taper here on the profile. It's mostly balanced, but I believe this is a foundation. What we have here is a pretty decent foundation for the next leg up. A fair amount of volume. We traded 1.17 million contracts. That includes the rollover. Remember, we're still rolling, expiring this week. It's quad witching Friday this Friday. So the volume is going to be higher than usual. But overall, we have a pretty good base, in my opinion, going into the next rotation up. The market is back in balance. So if we look at the bigger picture, this is a daily. RTH only, the pit session only, okay, the U.S. trading hours only. And you could see here that we've pushed up, down, consolidated, then we had that big day down, and we were basically pushing right back up into the MC point of control. This is balance, folks. It's really not doing anything other than balancing. So this morning, the expectation is for it to make an attempt lower and then start to push higher and then hold in range. Why? Again, we are in balance, so we're expecting more of the same. And on top of that, we have the FOMC tomorrow, so it's hard for OTF or the bigger participants, the higher time frame participants, to commit as of yet. There's important information that's going to come out tomorrow, and so it's better to just sit tight and wait. Okay, so this is the daily the daily composite chart. Notice the volume on Friday, just outstanding. It's above the it's above the first standard deviation, just below the second standard deviation of volume. Yesterday, volume was in line. You see it against the black line. That is the most common. That's the point of control or the mode of, range. Sorry, I'm talking volume, but it's range. The mode of range at 11 points. Yesterday's range was just under 11 points at 10.75. Here's the volume from last Friday. Here's the volume yesterday. Notice the volume yesterday was fairly strong, but again, it's rollover. Okay, so to me, it looks to me like the buyers have been found and the market's starting to rotate up. Here's the overnight. This is yesterday's day session. This is the prior day's overnight session. The dark blue on gray profile is Globex. This is RTH, and here's last night's or the current Globex session. So we are drifting up. We're continuing to move our Globex point of control higher. We have some pretty high kurtosis with a double distribution profile. The market opened and immediately went up in balance for the entire session, basically in this area up here. The dividing line in between the upper distribution and the lower distribution is yesterday's high, so I'm keeping an eye on that. But right now, what we have is a pattern that is fairly bullish. Okay, so the expectation is for this to continue higher a little bit, and therefore that's why I was expecting a small pullback to balance the inventory a little bit before we start to base and then continue higher. Pretty good positive delta here. Again, we're in the rollover, so we can't really rely on that too much. But overall, we also have positive inventory from yesterday's close. The expectation for today. So here we are. We pushed down. Okay, we bounced up, and then what we have is a consolidation a consolidation pattern, which we would either expect to resolve down to continue this move that happened, or we put in this higher low and we start to shift up and then attack the high again. And it looks to me like we're likely to attack the high because that's what we've done over time. So this morning, open auction out of range. I expect it to make a feeble attempt at 24.30, the MC point of control, and then I'm looking for it to push that high and then sit up here. I'm expecting about 7 or 8 points of range today. Not much, even though it's a Tuesday. Not expecting very much range. I would say 7 to 8 points is about where we will be range-wise. So I expect it to hold the gap like it's done so often. And I expect it to explore higher, but then run out of steam fairly early. Okay. Barring that, if we find a buyer early on and I start to see a weakening, so I'm looking for a lower high against liquidity on the offer on the retest, then I'm looking for 24.30 as a target, bounce up to our swing up top, and then potentially continue lower to 28.50 to close the gap from Friday and into yesterday's high, which was 27.50. Hypo 2 is the better trading opportunity today. For this, I expect 9 to 10 points max on the range. Okay, so that's where we are. Good luck today, and I'll catch you tomorrow. It's short and sweet today. Take care.